Hello everyone, welcome to this episode of Market Pulse. I am Ajit Maholi, the founder and mentor at LPAT. Let's take a look at what the indices have been doing and are likely to do in this coming week. All right, so let's begin with Nifty. So if you had gone through the session Market Pulse last week, there was a very beautiful opportunity that I had said at this area of demand zone, and prices have rallied pretty nicely from there, giving a very high reward to risk ratio. So on the monthly, there is nothing that has changed. Prices are making new highs. Today we printed new highs. Trend is up, but remember we're getting overextended. We could even go into a consolidation mode. On the weekly again, after that consolidation for about 2 weeks, a gap up, but it is important to see how this week closes with results coming out from heavyweights like Reliance, HDFC Bank and all the Kotak are coming this week. So that is going to have an impact on the index. But the momentum is pretty strong towards the upside. Still avoid shorting. If you're an aggressive trader, you can look at getting into some kind of spreads tomorrow with a higher strike so that you are protected in case it goes against you. All-time high, no supply. Beautiful move from that area of demand zone. And that's a new area that is being formed here on the daily chart. That's a new demand zone that we have formed. So if you want to go long, you'll have to wait at least for a retracement up to 21,800 to 21,700. That's the area where you can again look for longs, and markets could also keep oscillating here. Remember, result season and tomorrow, day after tomorrow is going to be Bank Nifty expiry. Result season are coming out. So be careful. Markets are running up very fast. Don't chase. You can even have just intraday setups on the long side. You can just be stock specific. You still will get better returns. So the pullback on a daily has to be at least up to 21,800 to 21,700 for some short-term longs, which can be held overnight. And when we come, and also mind that on the weekly we are getting pretty overextended. So any long new trades above this will start getting more and more riskier. Though you may get some trades, as long as you keep it limited to intraday, it should be fine. So on a 75-minute chart, probably that's the best area of demand zone for us to look at some good positions. We'll have to wait for that. No shorting in the index. You can trade intraday as well as some option trades if you are if you're aware about that. We could even still go up. Now this entire move has been given by IT. The next move could be given by Bank Nifty. But then IT might remain subdued during that period. And then after banking results will start this week, we'll also have the budget event coming in February. So shorting should only be on confirmation. We could see 1 day or 2 day falls like this based on some news or global events. But the trend is pretty strong and momentum is good. Avoid shorting, pullbacks, you can look for intraday longs. Bias towards the upside. But remember, as the more we go up, the more your reward to risk in the index is going to reduce. So it doesn't make sense that you go long here right now when you had the chance to go long at these areas. Now you'll have to wait for prices to come to these areas before you can look to go long. A quick look at India VIX. So as expected, India VIX is also moving up nicely. So I said that the range has shifted for India VIX. Now you will see the range between, let's say, about 12 to 16. So if this also moves up along with the markets, be cautious. Do not try to go aggressively long and wait for some confirmation. Or maybe you can look at some credit spreads because IVPs are pretty high and you should get good credits for this week expiry. Going to Bank Nifty, which is where my interest lies. So it has also moved up nicely from that area of demand zone. We are in this area here. So on the monthly, if you see in Bank Nifty, we came back, tested that demand zone and went up. We still have not yet given a new high. It's possible we can give, but probably maybe only after Bank Nifty expiry is what my assessment is. But you never know, markets can always surprise. So this is again consolidation. Now, remember one thing, if Bank Nifty starts moving above 48,400, 500, there is a good chance we could even raise to 49, between 49 and 50,000. That could be a landmark number that traders might be eyeing for Bank Nifty at around 50,000. So be cautious, don't aggressively get into any shorts, and on every pullback, you can look at going longs. On the daily, if you see Bank Nifty looks pretty good for a move up, at least towards the prevailing all-time high of 48,650. So no shorting. Every pullback can be used to go longs. And on the daily, we have these areas of demand zone where you can enter into some confirmation longs. And if it gaps up and goes, then don't chase the prices. If you have long futures, you can or calls, you can look at or even bull put spreads. You can look at getting out of it, and some portion you can keep it for higher returns. On the 75-minute chart, when you see Bank Nifty, that's the area where it will probably most likely first make an attempt to go tomorrow, probably in the first half, and then start retracing up to this. Now, this becomes a crucial demand zone. If you break this, then you will get probably better prices to go long in Bank Nifty, let's say at these areas. These are best areas to go longs between, let's say, 47,700 to 47,500. This will be aggressive intraday STI kind of trade, short-term incomes. And if it starts moving up, shorts here, if it starts moving up, shorts here only will be on confirmation because it's a range bound. Prices will try to make a new high. So avoid shorting pullbacks, go long. And maybe if you get an entry point somewhere close to 47,800, that will have a good reward to risk ratio probably coming up in the next week. So bullish bias in Bank Nifty as compared to Nifty, Bank Nifty will have pretty good reward to risk ratio. So bullish approach on both the indices. Be stock specific. There are many stocks which are low on the curve and provide you good cash returns if you are into equity buying. Avoid getting long with the future in the indices, at least at these highs, if you're not aware of how to trade them at smaller time frames. Right. Hope this helps you.